Well, good to see everybody. Some friendly faces, old faces, DR and Jim looking at you, but friendly. When you get to be men of a certain age, you better be pleasant and friendly because you can't run fast enough to run away. Yeah. Always good to see you guys and recognize some of the other names too. And there's Greg and whatnot. Well, I've been doing a lot of work with artificial intelligence and creativity lately. And one of the things I've been learning is the modern social media and getting to the point. And so I've been looking to convert some of my teachings into YouTube shorts and Facebook reels. And they tell you in no uncertain terms, you better say something intelligent in about 2 seconds or at least be funny, but not more than 8 seconds, or we just don't have time for you old people anymore. So I've made about 80 of them. And now I find that if I spend more than 30 seconds on a topic, it's like, man, what am I doing? Just droning on. So I'm going to violate the habits of a lifetime and try to go through this quickly, and we'll make the slides available to you. And we want to cover a lot of material broadly and then selectively deeply for today. So I guess I would say that the COVID, in some ways, I'm not going to say it's a blessing because that would just be wrong, I'm told. But it certainly has made people more of what they are, And we responded to COVID by really aggressively developing our hybrid teaching curriculum, perspective, content. And now I can't even think of not teaching it anything in a hybrid way, whether it's here with VTI, we're in my own consulting, or with the Army. It's just there's so many ways that you can adapt to people's particular circumstances that it really opened up a lot of avenues for teaching in ways that I think are turning out to be very effective. I think it's short-sighted to say, well, let me come up with shortcuts that I can use until things return to normal, and then we'll just go back to the way things are or were. I think those days are over. I think the world is changing so fast that the past is never what it was, if I can say it that way, or it'll never be what you think it was. And you've got to be looking for ways to get in front of those waves of change. That's something that has certainly come to my attention through the creativity work that I've been doing with Professor Fletcher from Ohio State and with the Storytelling Institute, both in Copenhagen and New Mexico. So I've been learning how those ideas of creativity, story science, narrative inquiry, those alternate ways of thinking that are connected deeply to our cognitive legacy in our brain. Those kinds of thinking really turn out to be very useful when it comes to adapting to changes in the market. And I take the position now that if you're a teacher, don't spend a lot of time telling me about how teachy you are and the things you're going to teach me in Atlanta teaching about teaching, and just show me your students. If you're a coach of youth soccer or martial arts or whatever, and you've got a philosophy of coaching and whatnot, don't spend a lot of time telling me your theory and practice of coaching. Just show me your kids playing. If you're a coach, show me your players. If you're a teacher, show me your students. And I can figure the rest of it out, because you can't hide what you are as a teacher or a coach from your students and players. They're going to naturally reflect what it is that you actually teach. And what you actually teach may not be what you think you're teaching. So as a teacher, you learn eventually to pay more attention to what your students are doing than necessarily to what you're sending. That's something that really came out in COVID, was the importance of evidence. And I'm gonna talk about that one. I'm gonna talk about that one right now because we're here. Right. So this is something that came out of one of the foundation's uh, Q&A sessions. So we're using a good, better, best model for our teaching now, where the good version is a recorded home study with bulletproof lessons and all the support material and lots of FAQs and recorded discussion sessions. That's really good because you can learn that as much as you want, whenever you want, and listen to it as many times as you want. And with lifetime access to the material, it's really all there just waiting for you to get after it. So that's a good version of what we teach. A better version of what we teach is to start with that, but then to have weekly office hours a couple different times a week so that as you study that material and you engage with it and you have some aha moments or some questions and you want to talk it over or report on the homework or be coached on your work, that you can do that by checking in, having done the due diligence, and then engaging in office hours with me or one of our coaches. That's a better version. The best version is when we are creating new materials and doing one-on-one coaching and diving deeply into your particular situation, not just to clarify the ideas in general, but to help you apply them in your own trading in a continuous manner. That's the power of coaching. I shouldn't have to make the case for why coaching matters, but you kind of have to because there's so much bad coaching that's out there. Um, Life coaching, really? I don't know. I believe, though, in coaching. Um, I've learned that you can really help players and understand the game if you know what you're doing as a coach. It requires a deep study of the game. It requires a selfless study of the game. You know, one of the reasons that great players rarely make great coaches is because they've internalized the game the way they see it and feel it and do it, the way it was for them in their career. And it doesn't automatically come with the ability to express that to other people or to have other people without their same skills learn to play the way they played. What made Johan Cruyff so amazing in total football from the Dutch and Pep Guardiola was not only were they amazing players, but they also had a deep understanding of the game and could communicate that to their players and help their players find a way to play within their skill set in a way that was powerful. And that's something like coaching in anything, whether you're a master craftsman in the machine shop or you're an artist or auto mechanic, mason, or a trader. There's something to be said for the theory and practice, the art of coaching, um, that is similar to what all coaches do, but which also has particular application in the world of trading. Just because a guy's a good coach, I would say, like in sports, doesn't necessarily mean that he's a good trading coach because some things that work in sports don't work in trading. Some things that work in surgery. If you're coaching a guy to be a surgeon, you'd really like for that guy to be a zero defect guy. You don't want a gambler in there. You don't want a guy that's taken multiple repetitive risks with your life when you're on the table. So the things that you would do to coach a surgeon might look a little different than what you would do to coach a trader, in which we've got to be comfortable giving up our beliefs and replacing beliefs with evidence. And that's what that little diagram shows you right there. That vertical blue line is before you start the work and you have beliefs about how the market works, how you work, how systems work, how money, all that stuff. And where do those things come from? They come from everywhere, and they are foundational to who we are. They are shortcuts into action, and they allow you to behave quickly when you are triggered. And most of the beliefs that we've inherited are helpful in a Paleolithic world when you're fighting tigers and sharks. A quick, urgent move might save your life if the tiger is your enemy. But in the market, it doesn't work that way. those kind of instinctive, fear-based, greed-based responses will get you murdered, because machine learning and professional traders have found ways to reliably exploit the repetitive behaviors of herd animals who react when surprised in predictable ways, invariably, inevitably, continuously. It's an endless cycle. So maybe the most important influence Van ever had on me was to really help me see the power of beliefs and to explore those. I take the following position that what I want to do is minimize the number of beliefs that I have to have. I don't spend a lot of time trying to track down each belief I have and then go and see, hey, what was the source of that belief? And how did it come about? And how did it change? All that stuff. That's good Lord, take forever. I want to eliminate those beliefs unless I must have a belief before I can act. What I would rather have is the accumulation of evidence that allows me to study and make tentative conclusions with certain limits, provisional judgments, and come up with rules of behavior based on evidence within certain limits. I would like my actions to be informed by evidence of that type rather than on beliefs. I mean, who are you going to believe, me or your lion eyes? I'm going to believe the lion eyes. If we can convert actions to evidence-based instead of belief-based, there is a tremendous freeing because we don't have to justify. When I create a belief, I'm sort of invested in that. I believe that that's really true, and I have faith in it, and I'm going to persist in spite of evidence until when? When does the evidence so compelling that it's going to cause your belief to crash? I take the position as a lazy man. Let me just start with evidence of what works and gear it to actions in a repeatable way and develop robust systems with insurance and protection, and then act in a way that I can accumulate evidence and keep doing it as long as it works. And then instead of investing a lot of time in proving beliefs and all that, let me just develop a wedge, the simplest tool known to man, the inclined plane. And that as I'm improving my performance up and to the right, I can ratchet that. I can push hard and then wedge it in and then not backslide. And I can start building on a basis of evidence, and I can replace beliefs with evidence. Now, when you have enough evidence, it makes sense to start developing a hypothesis and theories and bodies of knowledge that are connected so that you can start explaining and predicting and anticipating and looking for edges that other people who operate on beliefs might not see. So I'm not saying get rid of all beliefs, but I'm saying don't spend a lot of time monkeying around with those. The sooner you can discard them and replace them with evidence-based actions and then forward-looking evidence-based beliefs, the better I have seen people perform. So that might be a 10-minute lecture in one of the Creativity 202 lessons, and it would ask you to do an investigation of your own trading practice and your own experience in life, and take a look at moments when beliefs worked and didn't work and what you did about them when they were in tension with evidence and how you resolve all that stuff, and then come in and tell a true story about something that was significant and meaningful, and thereby allow us to reveal something deep about the way that our brains are working. So this is a greatest hit or a lesson learned from the foundations, is that as we have just focused on accumulating evidence, we're doing better. And I'm going to show you some examples of that in a minute. Well, let's just do it now. I say I'm a teacher. Let me show you one of my students. This was from a coaching session yesterday. And this is Jeff's report of performance. I would call this evidence. So Jeff is an interesting dude. He's been trading for 30 years. He started working with me a couple months ago with the Creativity 202 course, and has completely changed the way he's trading. Now, in his other life, he is the senior test pilot for the state of Texas for firefighting, aerial delivery of chemicals, and all that stuff. He tests the airplanes when they come out of the shop to see if they're really fixed. He teaches guys how to fly in critical states. And he's been dabbling, I would say. I don't. That's probably fair to. He'd probably agree with that. He's been dabbling in trading for 30 years with mixed results. As a result of what we've been doing together in the creativity course and focusing on evidence, he's developed some short-term systems with no overnight risk that have the following evidence. Well, this is from this week. Actually, previous week that ended Friday. He had 26. Now, here's where I should also put in some context. He's out in Utah for 100 days firefighting, and he's trading from his phone in between runs. So maybe not the best infrastructure. We might find better conditions for trading, but he's working on it, and it seemed reasonable. He's a grown man. 26 trades. His best trade was 4.6 R. His worst trade was minus 1.3, so we're going to work on that one because we don't want to take a trade worse than 1. 13 wins, 13 losses. He's got a standard deviation of 1.3 and a NSQN of just about 2. Here's where it gets interesting. It's a 50-50 win rate, so it's a coin flip, literally. And his average win is 1.08, and his average loss is 0.58. So that's a 2-to-1 payoff with 5 trades a day on his phone, less than ideal conditions. It's a coin flip, and the rolling R average, his expectancy is a little over 2. His trade sequence plot you see there, that was the trade by trade performance. So it's a mixed bag. The wins don't come in clustered. His cumulative R for last week was 6R, and his distribution is correct. The first thing we look at is no losses worse than 1. And then between -1 and +2, we have a normal looking curve, which shows that this is a standard system that you might find in nature. And it has fat right tails, which pay for all of the losses. And it's positive expectancy between -1 and +2, which means that when he's just trading normally and he doesn't get a fat right tail, he still has positive expectancy. And then that pays him to keep following the rules, and once in a while he gets a big win, and we know that good things can happen to bad people, so we don't take it personally, and we just make bank on those, so we don't lose our mind. So that was just 1 week. Now, he's been doing that for a month, and here's what his monthly stats look like. This actually includes the previous 2 weeks. So he's got 51 trades. Again, the win-loss rate is 50-50. He had 1 scratch. And his average win was 2-to-1. So he has stabilized now a 3-week process under less than ideal conditions, and we're accumulating evidence that this thing is working. Now, what you should know about this is a system that he's never traded before. He's never been a day trader. He's using 3-minute and 5-minute bars. He's never done that before, and he's working with patterns that he's never seen. And he started forward trading it within a couple days of learning the system with 1 share at a time live, so that he knows exactly what it feels like to trade it with live money with his broker. And that's the best simulation of trading that you can have, is trading. A physicist would say, or a modeler would say, the best model of a cat is another cat, preferably the same one. And that's what he's doing. He's learning forward immediately. It's based on evidence that this system can work. And so without spending a lot of time in back testing and checking beliefs, he's just going with procedures, following instructions, and doing detailed notes. Well, here's what his trades are starting to look like. Let's get one on the screen here. Let me start here. So this is one where he was on a 3-minute chart over a 5-day look-back period. He saw at the red dot that the collapsing dragon was collapsing. He put a quick wrist box on back to the PSAR. It immediately collapsed the way collapsing dragons do, and it bottomed out and started to retrace. It hit the edge of the dragon, the 10-period Bollinger Band, plus or minus half, and he exited 20 minutes, 30 minutes later with a 2.5-hour win. Lather, rinse, and repeat. Here's one where he had a short side bias, and so he hit a collapsing dragon for 1.3. He made a mistake here on his long position. He made it a market order instead of a limit, and it quickly got him out. And then it was a platform problem with his phone. And then he re-entered like you normally do. So basically stop and reverse and pulled in 1.7R with a Kata 2 formation. No overnight risk, net 2.8. This one, he missed the short from the opening. He was flying an airplane in a fire. Well, that'll happen. He sees the SSC entry has a wide stop. It works. He sees the peak, and now the PSAR, which is our adaptive exit, gets stopped out for 3.4. He was able to exit over here because it made a lower high, and that's our rule for getting out. That's a Kata 2 exit on the other side. So he didn't get burned in the gap because he's got no overnight risk. And now he misses the immediate short, but he takes the second one and then stops and reverses and pulls in another couple flavors of R. On this one, he's now using, I think this is a 30-minute chart. And what he noticed was that his short side bias allowed him to get 0.4 on this trade. It only went as far as it went and then refused to fail further. But because he had a long side bias, he didn't take the automatic Kata 2 entry or the emerging dragon entry or the Kata 2 entry once again, and he missed that normally useful, easy move. But he did then learned later to take the Kata 2 here. And as he did some more research through his trade frames in those previous 2 or 3 weeks, what he discovered was that the beliefs he had about market bias were overruling the rule set. Like he wasn't taking some trades because he had a belief about directionality. And the trades he didn't take were better than the trades he did take, but the trades he took were a 50-50 coin flip and 2-to-1 payoff. So, we can make a living on that. Now what I would say is, after I review his histogram and his trade frames, I am then taking a look at how he is developing the coaching eye. I tell him, look, what do you expect me to say about your performance? Go ahead and write that down. What do you think I'm going to say? So he prepares these, and now he's coaching himself. He has now stepped out of the trader mode and into the coaching mode, developing the coaching eye. And now when he commits to that in writing and he brings it in, I can say what I'm going to say, and now we can compare what I say to what he said. And then if we agree, maybe that's interesting. Be careful. If we disagree, then now we have something to explore, looking at evidence and what it might mean. And if he said something I didn't say, or if I said something that he didn't say, we now are outside of each other's aperture, and now we can more collaboratively have a useful coaching session. Oh, so we're also doing that inside an accountability group where 2 or 3 other guys that are working with him on this stuff anyway and know these materials can now offer their insights and work with each other during the week. So what we've decided was a really important lesson learned was the idea that practice is more important than theory, and evidence is more powerful than beliefs. And there is a time in the way of the sword to trade live and be ruthless in your execution. And there's a time where you should attend to the way of the bowl and work on your coaching eye and your self-reflection and the path not taken and the road less traveled. And then there's the way of the bowl and the sword, that I use my sword, my action, to take action to improve the bowl. I'm carving the bowl better with the sharp edge of my active mind. And I'm learning to do that in a disciplined, responsible way. And that makes me a better trader when I use that same active mind in my journey of self-development. And the better bowl that I make, the sooner I can empty my beliefs and then receive new insights and guidance and wisdom from the universe and reflect on that. And that makes me better when I use the sword. So the way of the bowl and sword is learning how to integrate the active and reflective elements of our mind. I would be wrong if I didn't say, oh, you should also learn how to grind. That this whole process, you get splinters when you're working with wood, and you get nicks on your hands when you're working with a sharp edge, and you get the occasional cinder that burns you when you're putting that iron in the fire. So learn to grind, and remember that there's a time in every fight where both guys think they're losing, and the guy that is trained and committed and all in wins. That's what happens. So I'm using a metaphor of a fight or combat or boxing or jiu-jitsu or judo, because that metaphor works for me. It aligns things clearly, and I don't have to question a lot of beliefs because I have a body of knowledge that I've accumulated in those areas that I can leverage. The next thing that we've learned is this idea of the multiple time frames. What we're finding really works effectively is a combination of 3-minute, 30-minute, daily, 3-day, and 9-day bars. Each one of those is weird in a certain way. 30 minutes is faster than an hour, but slower than 5. 3 days is slower than a day, but faster than a week. And so I'm getting intermediate information that's off cycle from the masses. And that allows me to see things a little bit sooner, a little bit quicker, a little bit deeper. I like to think of this journey up the hill as being in this mindful, safe space in that blue dot. And that as you're pushing that thing up the hill and you're learning, that's where you want that wedge to come in and keep you from backsliding. So that when you're working with your standard pattern of direction neutral, I can look at things like the RL10, which is the thin blue line, that's price. And I can look at the thick orange line, that's the 10-period moving average plus or minus a half standard deviation, the dragon. And I can see where the RL10 turns and see where it enters and leaves the dragon. And that gives me plenty of time to shift my orientation to the next phase of this journey and allows me to frame trades with very small units of risk against very large routine units of reward. And that when that thing works on the other end, when the RL10 rolls over and then crosses the dragon, I have to be out by the time RL10 comes through the dragon. Whatever you're trading on any time frame, put a moving 10-period regression line on it. Put a 10-period Bollinger Band plus or minus a half, and then just take a look at the oscillations that it routinely makes. And if you could figure out how to buy it as it crosses the dragon and sell it not later than when it crosses the dragon again, tell me if that makes you happy or not. Because that's going to be one of the things that I tell you way at the end of this when someone asks me, hey, what are your suggestions for effectively trading your systems for those of us in the world where the U.S. session falls in the middle of the night? Well, you could trade Forex because that's trading continuously mostly with very clear and well-defined moments of activity where our patterns work really well. So you could pick the Forex window that works for you. Or you could do it with futures because that trades continuously. Or you could simply use hybrid swing trading on 30-minute, 2-hour, daily, or 3-day charts. And now the time when the market is open is not as important as the time you pick to frame your trades and get your trades locked in. Or you could decide on the things that you want to trade that there's a certain targeted time window of 60 minutes to 2 hours where most of the move is happening, and you can just make accommodations in your life to trade during those times. Or you could start with the time frame that you have and then the constraints that you're working with, and then within those windows, find instruments that are moving in time periods that you can manage, and then apply these fractal patterns in the standard way to get industrial production in the way that you trade. And then you'll discover that it is in the application of the systems, the process, and coaching to your situation, which is where the secret sauce is. It's not trying to learn to trade exactly the way I trade. No, it's learning to trade the way you trade using these standard professional tools that really makes a difference. And that's something that we've learned in the foundations course and in the creativity course. There was a question that came up yesterday. A guy said, hey, I was out of the net for 10 days going to India to take care of family. How do I go about restarting my trading? Because I've been out of trading now for 10 days. And I said, well, it's really a simple application of plan, prepare, execute, assess, because the way you ended trading on your last session is the start point of the new trading. So we got to go back to wherever you stopped trading and make sure that we took care of all our business, that we put the horse to bed properly. We took care of our equipment. We cleaned the workspace. We documented our insights. We updated our charts. We updated our statistics so that we are now free to focus on forward trading. And then it doesn't matter if you spent 1 hour or a day or a month in between that moment and the next trade. You always took care of business and have a strong foundation to begin with. But you could also take a look at how you approach planning and preparing to be ready to trade. So that question was asked to me back on May 8th, 2013, and I quickly mapped out my standard trading practice of the last 30 years. I said, well, if you want to know, here's what I do. I start over here with, what do I have to be ready to trade? And just work backwards to the last time I traded. And these are all the things that I have to do in sequence to be ready to trade. And I'm going to fly right through this because there's a good 12-minute video on our homepage that goes through this in all the detail that you want. But I've got to get my mind state ready. I got to be in a zero state. My platform and dashboard have to be ready. My rehearsal must be complete for all the things that I propose to trade. And I got to understand the gap stat and market condition so I can get an insight onto the size of the expected move for the day. Everything I propose to trade has to be on a logic chain so that I can go from moves in the market to the sector to the target to the entry or exit quickly in 5 seconds. A logic chain that shows me where the winners are, where the movers are, and lets me get on the target right away. And then I have to have that logic chain prepared with a trade frame with key prices for every target, which means that I have to know for everything that I propose to trade, the statistics of the gap, the range, how it fails, its signal to noise ratio, etc. And I'm going to do that to prepare a trade frame for everything that's on my consolidated watch list. Those are the things that I'm going to be prepared to trade. And I have 3 sources of trading targets. There are 3 ways that something goes into the box that I'm going to be ready to trade tomorrow. The first one is the set of standard tradables, the frog champions. No matter what happens, these things move so reliably, so powerfully, so repetitively that I'm just ready to trade them no matter what the previous condition is in. We have rules for what it takes to be a frog champion. And then a continuation pattern from yesterday, which is any trade that I made yesterday, I'm already invested in that symbol and I understand where all the key prices are. And part of my after action review was to prepare that thing for any continuation today. So the way I closed out today's trading plan is already helping me prepare for tomorrow's trading plan. So I got to take care of that business. And then any candidates from new swing systems or strategies that fired for the first time. Hey, yesterday it was a 4-day down. Today it was a 5-day down, and that triggers the 5DD swing pattern, which says over the next 3 to 5 days in bull markets, there's a better than even chance that it has a 5 to 8% move in either direction that is going to be very tradable. And it would start with a mechanical entry above yesterday's high or below yesterday's low as the initiation of the new leg. Well, I know that, and I know that about each of my 12 different swing trade systems and strategies. And so any of those that fire become candidates for new targets, plus continuations, plus the standard tradables. Those go onto a consolidated watch list. They get framed, they get rehearsed, and then I'm ready to trade. So that's what I do every day, not based on beliefs, but based on habits and checklists and evidence. And then when I was trading the previous day, I had been in the zero state and see what's happening and follow what's working and use the logic chain and apply the different systems at the appropriate time of the day when they're ideal. So that means I got to be ready to structure my intraday trading in the following way in 30-minute chunks. I know that the first 30 and the last 30 minutes of the day are crazy, so I'm not trying to do too much there. All I'm trying to do in the first 30 minutes is get something moving and get warmed up and ready to go and try to find a mover. And then in the next 2 hours between 9:30 and 11:30, there's moments in which the moves of the day are starting to unfold after the morning shenanigans are over. I have a chance to see what's moving, what's not, where's the relative strength and relative weakness. Is the market up or down? Is my sector up or down? I can shift out to 15-minute and hourly framing once I'm a couple hours into the day. I can be prepared for the sideways quiet channels of lunchtime and really be prepared for the afternoon move as it emerges from lunch. It's either going to be a continuation or a reversal of those big moves of the morning. And then I can make sure that I am getting out of my intraday trades before that last half hour of madness occurs. And I can be posturing for those swing trades that I want to carry overnight with the appropriate amount of risk. So the answer to the question of how do I get started after the time off is exactly that. I just do what I do to be ready to trade. And it didn't matter if it was 5 seconds from the last time I traded, I get into the zero state and I move to the next thing, or it was 5 days and now I just go back through my plan and come up with my targets and rehearse my strategies and be ready for tomorrow's trade. And I'm ready to go from the intraday trade to the swing trade. I'm ready to take a swing trade that's working and add a turbo position intraday because it's better than anything else going on and I'm already invested in the key price levels, and lather, rinse, and repeat. And at the end of the day, I make sure that I go through my trade journal to document what happened, what worked, what did I learn, and forgive myself for the trading that I performed and give gratitude for the trading I was performing. Now I can go about my business and get ready to work. I got to have all that done before I'm ready to trade, and then tomorrow's a new day. Every day in the market for me looks exactly like that. So that's how I answer the guy's question. So my next challenge was this one. I believe that a student honors the teacher by demonstrating how you're applying the techniques that you learned from the teacher. And so I started this project out of gratitude to Van. And we tried to document 35 years of our style of intraday swing and core trading in our community of practice. So with assistance from artificial intelligence, which helped me break through the perfectionist bias and the imposter syndrome. And if you've never had either one of those, they are real things. And if you've ever had both of them, you know just how miserable life can be when you want to say something but you don't want to say it until it's perfect, and then you wonder if what you're saying has any value at all. If you're honest, you've had that experience, and now try to say something about trading that people that trust you are going to invest their time and effort and beliefs into, and have that on your conscience. So with the assistance of artificial intelligence and a writing team of my students, they were able to drag me to victory. And now that little spirit animal you see there is who I am in my best trading day just before the market opens. That comes from an AI image generator called Midjourney, and the prompt says something like this: show me a humanoid spirit warrior badger prince who is on the trail ready to fight tomorrow the existential threat to his family, but he is skilled and confident and prepared and is taking a moment to get centered and focused on tomorrow's battle with confidence. Show me that. Oh, and so it did. That's what it looked like. And that says, that's exactly how I feel when I am in the zero state ready to trade. Mess with me. You know what I mean? So, one of the things that we learned in foundations was that every one of us has some kind of core feelings, identity, beliefs, persona in our best trading mentality. And if you can articulate that, we can find the spirit animal that reminds you of what it is that you propose to be, what you claim to be, what you aim to be. And people have been using that form of power animal insight for approximately forever in every culture. And so that's one of the things that we work on is getting aligned internally with what it is that you're doing. What is it that you think trading is, and what are you trying to perform, and what are the qualities you got to have to be able to be successful? And what is the iconic animal or symbol or spirit animal that helps remind you of what it takes to endure? The other part of the problem with the book was coming up with the title, and all I know is that it should contain something about what the book contains. And the book contains essential elements of information that we've gleaned painfully through 35 man years of performance myself and over 250,000 man hours of documented professional practice by fighting our way through this with guys like D.R. Barton and Jim Carroll and Bob Rourke and just beating each other's brains out about why do you think that works and what's the evidence for it and what else can we do. And if you do that relentlessly for 35 years, you get 250,000 years of documented professional practice that's evidence. And we've learned how to apply those lessons in a supportive community of practice that understands how hard it is to learn new things when you got skin in the game and you're betting the farm and you're taking care of your family and tribe. And we've learned some things about how to create adaptive systems for all time frames, all markets, both directions, across different asset classes. We've learned things about integrating systems and self and markets and expanding the sweet spot when all those things are aligned in what you do. And we understand some things about how to plan, prepare, execute, and assess so that you have an unfair advantage in the marketplace when you trade. And we know something about continuous improvement because a lot of us grew up in industrial manufacturing where you're measuring with a micrometer and you're making brake systems for family cars that must work for 30 years in a rainstorm. And so Japanese manufacturing, industrial manufacturing, continuous improvement teaches us what we need to know about how to continuously improve our systems for large volume of trading, not waiting for the occasional win to come in and save the day, but to have an industrial manufacturing process for trading that complies with the rules of engineering and evidence to get better. We know how to do that. And we know how to set up an ecosystem of learning so that no matter what style you learn in or learn from or what situation you're in, that we have ways of adapting our lessons to align with how you learn. And I would just say, if you're a student, if you're a teacher, just show me your students. I've showed you what Jeff does. This is not unusual behavior. This is sort of what we expect because people that take the foundations course and the creativity course end up producing systems that look like this. And we evaluate them in the same way that I would evaluate a manufacturing process. Show me your control charts. Show me your list of results, your win rate, loss rate, average win to average loss. Show me the graphs, show me the trades that you're taking so we can see how you framed them. Show me how you are taking your own personal reflection and develop your own personalized, self-actualized coaching model. I want you to be your own best coach. That will make you a better trader. It'll make you a better asset to the people that you work with. And it makes us better too. So this is what Jeff said. He's got to reduce his watch list so that he has fewer things to worry about and he can prepare them better. Stop symbol hopping. stop getting lost in the lower time frames, take comfort in statistics to know where your edge is and stay there. And he saw that if he can take the difficult trades, he can take all of them. And if he saw that the ones that he elected to take win 50% of the time, and the ones he don't believe in are also going to win 50% of the time. So keep taking the signals. Here's something that I've learned. When you are trying to improve your own performance, you got to come out of your shell. You got to emerge into the world, expand your point of view, and look for new things and around different corners and look in the shadows. And you got to explore your own internal and external trading space. And then you got to document that in an artifact and produce evidence that you can then use to reflect upon, because you're going to use that evidence to help you manage your professional body of knowledge. So sometimes you got to have doctrine and rules that are your performance systems that are going to make you money routinely. But you've also got to commit some time to exploring the space, getting your scouts out there beyond what you're comfortable with, just so you can see what's going on. I don't want to spend too much more time with that other than to say that's what we do a lot in foundations and creativity. I want to take a moment and respect your time and say, look, just to update you on where we are in our learning ecosystem, on the left-hand side of this is what I teach. And I use that good, better, best model. Those are all recorded with lessons with hundreds of hours of me working with students and explaining questions and giving examples. Creativity 202 is how we use story science to get out of our own head and tap into the power of our brain to find new ways to explain our world. The foundations of trading is everything that I've learned and we've learned from a combination of core, swing, and day and hybrid trading into the essential toolkit for every time frame. And then we teach specialty courses on core, swing, and day. And then I teach a specialty course on how to blend those together. The roots of all that are in the foundations. And you learn a system in the foundations course that Jeff is using right now for the coin flip and pays 2-to-1. And that Bill Scheidt and Jeff Ocasio extended into the, on the right-hand side, the PRX crypto system and Bill's adaptive BMR long-term system, and my brother's sniper system for intraday and swing trading, and that Griff Cooper, a super trader, and Phil Wu, a super trader, have built into an applied systems course with the Kata 2 system. They got one coming up in July that you might be interested in, because I beat the crap out of those guys for 2 years every night, going through coaching online in public until they had nailed the Kata 2 system, which is a simple buy on a dip in a strong upward move, and it's a re-entry if you exited the first trade. That Kata 2 system is the core of the PRX crypto system that Bill and Jeff turned into a swing trade. But Griff is doing it with the intraday on 3-minute charts with Brazil and diamonds. At the same time that they teach you that system, they are teaching you how to turn a system into your system. So it's a combination workshop. You're learning my principles, Van's principles of systems development and personalizing a system, and you're learning the Kata 2 system the way Griff learned it, and you're being coached by a guy who is an expert in it. And when you complete that course, you not only have a working Kata 2 system, which can be done intraday or swing or longer, but you also have internalized the methods that we use to take any rule set and personalize it to yourself. They've also taken the Thinkorswim trading platform and created and duplicated all of my indicators, filters, systems, setups, and whatnot so that it works on Ameritrade and soon to be, I think it's Goldman. So that's a pretty good package right there. And if you want to see how I teach, just look at how my students perform. My brother is crushing it with the intraday sniper and the swing sniper. Scheidt and Boccaccio are teaching that PRX crypto, and it's amazing. Dr. Morrison, who just retired from teaching at the Army and is one of my students and been a buddy for 10 years, is working with the Forex group to teach robo trading, how to develop your own trading robots for hourly charts on the Forex system, and they're crushing it. So those are the things that we have. I would also be remiss if I didn't say, look, you've also got an options course made by Danny Ben Yair, a graduated super trader, an Israeli hedge fund manager for 30 years, who has also created the TC2000 bundle that documents and implements all of my setups in TC2000. So whether you're using TC2000 or TradeStation or Thinkorswim, we've got a bundle that can help you with all that stuff and save you a lot of time and programming effort. His options course is the only one in the world that gears the option strategy directly to our swing systems. And he shows exactly how to go from our swing systems into the options trades that he uses in his hedge fund. Now, in the learning environment, in the learning ecosystem, this is what we're doing every week. I should give you this. On Sundays, I have office hours from 9 to 10 in the morning, Central Time, where we answer questions and due diligence on foundation students. And there's lifetime access to that. If 9 to 10 a.m. on Sunday doesn't work for you, on Thursday from 7 to 8:30 p.m., there's a foundations course. You can attend either one of them. You can attend both of them. You can listen to the recordings that we record and put inside the course for the rest of your life. The Creativity 202 course meets from 10 to 12 on Sunday morning, and on Thursday evening from 7 to 8:30, same thing. There's 30 courses, there's 30 lessons in there. There's over 100 hours of true storytelling check-ins from the 4 cohorts that have gone through this from that Creativity 202 course. This is what we've produced. 4 new businesses for traders who are now trading full-time, having left their jobs behind. 2 guys who are teaching how they trade as well as trading, and completely revolutionized the way people are looking at themselves and the world around them because of the power of the Creativity 202 course. The U.S. Army, for crying out loud, is using those techniques in the development of leaders in my college based on the research that we did that made it into the New York Journal of Science and written by Fletcher and Rich McConnell. So this stuff, you want to talk about evidence, dude, evidence. So that's working. And then Monday, Tuesday, Wednesday, Thursday, and Friday from 8:30 to 9:30, I have a live nightly strategy podcast where I perform coaching for everybody in the foundations course who posts their chart with their commentary, and I comment on their commentary and I comment on their charts, and we record that and put those into the Patreon homepage so that you have access to that stuff forever. We've got over 1,000 hours of those nightly strategy podcasts and coaching. If you're an intern and you want to do some work, get a hold of me. I'll have you turn that into case studies. And then Saturdays, coaching by appointment. So those are the things that I want to say. I want to be respectful of your time and say what I was going to do now is kind of just flip through some one shot, one kill, 10-second shorts on things that we've been doing, but that I think covers most of the big ideas and the couple questions that we got. What I would say is, and so just rapid fire, market classification is everything. We do it every day, and we gear it towards what it has, how it's going to impact the swing trade. So the way we classify the market matters because it's connected to how we trade. If you've got a market classification system, or you're listening to some guy describe what kind of market it's in, but if you don't know how he's trading, that doesn't mean anything. It's worse than nothing. You need a market classification that tells you something actionable within the decision time frame that you're working on. And for us, that's geared around the next 2 days and 10 days. If we get those right, the weekly, monthly, quarterly, annual ones take care of themselves automatically. So we pay attention to market classification. We've learned that the 3-day bar, a 3-day chart, eliminates most of the noise of gaps and all that crap, but it is 40% faster than weekly charts. And you get to see beautifully oscillating markets as they work through the changes. On the left half of this chart, you saw in the red, what we did was we took the MACD histogram and we color coded the RL10 to reflect the monthly and weekly seasonality. So we can see the season that it's in just by looking at the RL10. And you can see how it went from red and yellow, winter and summer, or winter and spring, and now it's been in spring, summer, fall, summer, and it has cleared the previous peak of the RL10. This thing has no resistance overhead to the all-time high at 480, which is a 20% upside move. Now, it's had 2 bars of retracement come right to the edge of the dragon. So as we said last Friday, this market is perfectly poised to make a buy on dip routine move to the upside. We know what that is. But it could also be the start of a 3-leg sell-off that would take it back to the previous support level at 410. And if that doesn't hold, look out below to 390, 380, and 370. So we know where those trigger points are based on statistics, and we can just follow the price. We don't have to have a directional bias. I don't care what it does as long as it moves. If you really want rocket science, you can go and study the z-scores of the 3 regression line slopes, the 10, 30, and 90, and you can see how those multiple time frames intersect at key moments to produce critical states. I'm not going to talk about that now, but I will say that when you start studying regression lines, you will realize that the market goes through periods and tranches of identifiable support and resistance that can improve your trading. You can be as detailed as you want or as far off as you want. You can look back 150 days. You can zoom into 30 days. You can look at 30-minute charts. And if you're not following the nightly podcast on 30-minute hybrid swing trading, you're out of your mind. Because we've pulled out over 700 R since the start of the year and haven't had a losing week or a losing month using 30-minute charts on standard patterns. And we debrief that every night in the first 20 minutes of the Nightly Strategy podcast. If you just listen to that, you're getting a free workshop on how to trade. Maybe I am selling it too hard. Your mileage may vary. We know that the world market model helps us find the way opportunities flow around the world through regions and countries and sectors. We know that if we take a look at the top 10 regional indexes of ETF2, we can get a deep insight into the health of the entire market through those 10 instruments. We know that if we follow relative strength on the ETF2 method, which DR and I built over 20 years ago for the Smart Steps hedge fund program, still going strong. We know that that works and gives insights into sector spiders and broad asset classes so you can see what's working. Right now, the S&P is crushing everything. Everything sucks compared to the S&P. And what's working in the S&P is tech and consumer discretionary because of Tesla. Did you know that consumer discretionary, the top 3 symbols in that ETF, account for 30% of its move? And that is Tesla, Home Depot, and Walmart. Amazon. So if you needed broad exposure to what makes America great, XLY. So everything we do comes back to this top level process. Prepare to win, or you're just planning to fail. And if I could only do one thing well, it's to be prepared. Because if I'm not prepared, I'm not ready, I'm going to execute poorly, and I'm not going to bother assessing something that was just a bunch of knee-jerk. And the plan's just got to be good enough to give you some things that might move. I mean, there's only 2 kinds of plans anyway. There's ones that won't work, and there's ones that might work. And what makes them work is the level of preparation you versus your opponent. We use 4 seasons of MACD in order to help us standardize and simplify market conditions for indexes and individual targets. And when we can standardize and simplify, it allows us to do routine things routinely, to lather, rinse, and repeat. We know that from sniper trading that the best targets to trade combine a critical state based on location, overbought, oversold, or exactly in the middle, plus an extreme volatility, which is either extremely volatile and it's already in play, or it's extremely quiet and you can hear a pin drop, and the first move out of that is going to surprise people, and it will trigger the explosive momentum that makes it run forever. Things that have normal volatility, plus or minus one standard deviation, are not interesting. What's interesting is when you have something that is enraged volatile, it's in play, you can see it from a distance. But the other thing that's very interesting is when it's very, very quiet. Like when Godzilla is coming out of the Sea of Japan and is coming up on a peaceful sleeping Tokyo, and nobody knows it except the little kid at the beach who sees him peek his nose out of there. So very, very quiet, abnormally quiet, you better pay attention. So if the volatility is extreme and you're either in extremely overbought or oversold, you have combined the best of trade location plus volatility, and we scan 1,500 symbols a night and publish a newsletter for sniper targets, and we're crushing it with that on intraday and swing systems. We know the difference between signal and noise in price movement. Do you? Do you know how high your target moves from the open to the high of the day, statistically speaking, and that when it rolls over, you should pay attention? Do you know why that's true? Do you know how far your targets move from the open to the low of the day? And if they do that in the first 30 minutes and start to reverse and give you a 1, 2, 3 entry pattern in an otherwise uptrending market, do you know why that's the best signal that there ever was? You should. You should know that about each and every one of your symbols. You should know what the statistics of the gap is for everything that you propose to trade over the last 200 days. What was the biggest gap? What was the smallest gap? What is the standard deviation of that gap? Because the size of the gap predicts the size of the follow-through move. It just doesn't predict the direction. So if you get a huge gap, you're entitled to conclude that today is going to be a big follow-through. You just don't know which direction. So if you're preparing to trade and getting into the zero state, the last thing you need to do 5 minutes before it opens is check the futures and see if it's going to be a big gap day. Doesn't matter up or down. If it's a big gap day and you know how to measure it because you got statistics, you can now be on your best behavior for that day. Hey, if you only wanted to trade 1 or 2 days a week, you should trade on the days where there's a big gap at the open, because that's going to have the biggest intraday moves of all, and that could get you well started on a swing trade. Yeah. So those are the things that I wanted to say. I went a little bit long by 10 minutes or so. I actually did better than I thought. That's unusual behavior for me. So I want to give thanks to you guys for tolerating the sound of my voice and for doing me the courtesy of listening carefully, and the courtesy you show me when you send me good questions, because I use those questions to understand my own thinking more deeply. Here's what we know about true storytelling. And I've been working on the science of storytelling with Angus Fletcher and David Bogie for 3 solid years now. It turns out that the power words that we use have many meanings. And each of those meanings we remember and understand because of moments in our lives that are powerful stories that illustrate each of those words. So when I talk about the word love and what it means to me, I'm not thinking about the 4 letters of the word love and what that word with 4 letters means. I am remembering all of those bittersweet, beautiful, joyful, painful moments of love in my own life. And my understanding of the word love in all its different forms is the synthesis, the integration of each and every one of those stories and the powerful emotional valence that they have for me. When I can go into a trusted, safe, truthful circle and express true stories of my life on these power words and not be judged and not be advised and not be coached and not be recommended and not, hey, try that. No, we go into true storytelling circles and we talk about the power words from the true stories of our lives, whether it's true stories about trading or life or whatever. And we simply learn to sit in silence, emptying our bowl and listening to the powerful true stories of others for the resonance that it gives us. And it will trigger memories about things that we had forgotten about. So when you come to a true story circle and you tell a story about love, you think you know something about the word love because you thought about the stories that are meaningful to you. But then 9 other guys start telling stories about what love means to them based on stories from their lives. They're being vulnerable and truthful. And their stories trigger memories that you'd forgotten about. So you come in with one gift and you leave with 9 other gifts. And we're in there so that, and we are not judging. We are learning to sit in silence. And if you can learn to sit in silence and not be judgmental about someone else and to give them the benefit of the doubt and just to let them be who they are, you've taken the first step to doing that for your own self and learning to let go of those things of baggage that you're carrying with you. And you just learn to offer those up to the universe. Your job is to tell a true story as best you can from your life. That's your job. The universe's job is to figure out what to do with it. And it turns out that the universe is big enough to do that job. It actually doesn't need you to be judgmental of others or judgmental about yourself. All it needs you to do is to live life, document it, tell true stories about it as best you can so that the people may thrive and be a good person. And when you can do that in a circle of trust, and if you can walk into that circle every week knowing that that's what you're going to get from each other, you are unleashing the power of evolutionary creativity and tribal affiliation. And you realize that everything is possible and nothing is impossible, because you have a support group that can help you. And that's what we're learning about how to be good listeners. It turns out that a true storytelling circle, the most important skill is true story listening. Learning to listen deeply, non-judgmentally, patiently, with gratitude and forgiveness for all, humbled by the fact that we can do this. And then you realize when you do that, that the universe is listening in too. That the universe always goes places where people propose to tell the truth to see what they say, because the universe would like to hear some truth for a change. And when you empty your bowl and you offer that gift to the world, whatever that intention was, the universe is going to give you that back tenfold based on your intention. So if you're a lying, thieving SOB and you steal things for your own benefit, that and pretend to give that to, no, the universe will give that back to you in full measure. So if you just do your best as best you can and in support of others and tell your stories and let people be who they are and support the team, everything's going to be just fine. That's the evidence so far. So that's everything I wanted to say. I will open it up to questions from the team. Oh, I see the chat window is there. Let me jump into the chat and start seeing those things. Let's see. Ken's Workshops, Measurable Success, PRX with Bill and Jeff. I mean, those two kids, man, it's just not even fair. They know things at 30 and 35 that it took me till 60 to learn, and it's just not right. Yeah, the 9-day and the 3-day, Jim, that thing is just, it's fast enough, but also slow enough that it allows you to get that in-between step. And here's the thing, like imagine 30 days, right? So if I got 30 days and I'm using a weekly chart, I got 6 data points. I've got 6 bar charts, but I've got 10 3-day bar charts. So I have actually 60% more information. I can see turning points a little sooner. I can see the patterns a little faster. And then the 9-day is kind of the same thing with monthly. If you took, I don't know, 270 days, it's much faster than a monthly. But it's slow enough that the weekly gyrations don't get you. Yeah. Let's see. Richard asks, when the market moves, it can move very fast. What do I do to recommend the best way to monitor that market so I can make sure that I catch the moves in time? Are the trading platforms alerts the best way to go? I believe so, yes. Especially if you will get to a point where you become comfortable with this style of trading, and you want to take 10 symbols and have 5 different patterns. So you got 50 different things going on in your head. And if you can frame the trades and you put in a green line above resistance at the right place, that could be an alert which triggers you to then execute the order, or it could be visual trading on the chart and just make the trade right there. That's what you want. Is you want to have internalized your own due diligence to the point where you are not second guessing what to do. The time to start framing the trade is yesterday, last night, right? You are already figuring out, before you get in, you should already know where you're going to get out if it hits resistance and starts to stall. And if you're going to stop and reverse, and if you did, and it reverses again, are you going to get back in? You should know all of those answers in the 2-hour battle drill before you ever entered that first trade. You've already got that standard decision-making process done and rehearsed. Here's why I say that. The 2-hour battle drill is the key to how you think about this. You've identified a minimum manageable risk box. That's the box that if price goes against you, you have enough evidence to say the hypothesis is wrong. I'm out with a 1-hour loss. Done. Now, do I have at least 2 of those risk boxes in my direction for rewards? Reasonably? Yeah. If it gets to 2-hour and starts to stall, you got everything that you ever dreamed of. You framed a 2-to-1 trade, you risked $1, you earned 2, and it's starting to stall exactly where you predicted. That should be the most well-rehearsed exit that you ever made in your life. Exactly where you're going to get out, and if you're going to stop and reverse. And then if you don't stop and reverse, or even if you do, if it reverses back in your direction and makes a new high, are you supposed to get in? You better already know that before you put the first trade on, because like D.R. Barton has taught us for 20 years, price ladders continue to the farthest edge of the universe. There's some price out there that is key. So if you know what your price ladder is, you know where the support and resistances are, and you know if that thing can keep going reasonably in the time that you have available. So visualize all that ahead of time. Don't be in the position of saying, well, I got out of this trade. I wonder what I should do now. Well, what you should do now is walk out of the room, get in the zero state, and have a better trading plan when you come in. That's what you should do. If you don't know what to do, you should get out. But if you know what to do, it's because you visualized it and you framed it out and you have enough of a professional safety buffer in there. Here's one that'll save you all kinds of grief. Take your minimum manageable risk box that you think is the one that incontrovertibly says that trade is over. That's your 1-hour loss. Make that a 0.3 loss. And then position size 1/3 of your normal size. So that if it moves against you like you predicted, it's a 0.3 loss, and you can bask in the comfort of knowing that you averted a full 1-hour loss. You actually averted a 0.7 loss, and that you will never hesitate to get out at that 0.3 loss because you cut your loss. And yet when it starts working for you, You can routinely add more positions if it continues to work in your direction. And as new buyers come in at each successful test of resistance and it breaks through, that means the next higher time frame's coming through. And you can start building towards success. But you took a loss when you were at the smallest, and the big win is when you were at your largest. So play it like poker chips, 1, 2, 3 positions, and set your minimum manageable risk box to 0.3 of a loss. Position size accordingly. Only take 1/3 of the size that you feel comfortable taking. You know why you're comfortable taking? Because you imagine that trade is going to work. And you've decided to put the largest possible position that you could justify on it. So as soon as it starts moving against you, you immediately start shivering and wondering, and should I follow my rules or should I over? You're thinking, and that's not good for the team. So take your risk, make it 0.3, position size accordingly, and then gather a lot of evidence that tells you if you're actually getting 2 to 1 when you can trade calmly. Now you know something about you, and you know something about your rules. You've given them 30 trades to be able to gather enough evidence to make sound professional decisions. That's the difference between a professional and an amateur. A professional is disinterested in the trade. It's just one more piece of evidence that I'm going to study when the market is over. That's all it is. An amateur, a hobbyist, it thinks this is the one that's going to work, and position sizes according to their optimism. I'll tell you who I'm betting on for the next 40 to 200 years. And people worried about AI and what about robot? Hey, I hope every knucklehead out there asks AI for advice on how to trade. That's the easiest thing in the world to game, because they're going to take the simplest, safest, most standard rule set, and you can manage against that as a carnivore forever. I hope that's what people do. I don't know. I have written about 5 million words in the last 2 months with the use of AI and ChatGPT, exclusively in the areas of trading psychology, trading strategies, and getting AI's best advice on how to manage money. It's the dumbest, I almost said it's the dumbest shit I ever saw, but that would be an example of the kind of language we would not tolerate in this environment. But that is some of the dumbest stuff I have ever seen, because AI reads everything and tells you a synthesis of everything, which includes all the dumb. So don't do that. Be professional. That's what I would say on it. Rob asks, where's the best place to start with the process? I would start with the 40, or it's now 80. There's 80 YouTube video shorts. You can watch them in 10 minutes. And if that hasn't turned you off, maybe you're interested. I would say, look, there's 2 ways. I'm going to go back to the, if I may, to kind of the learning ecosystem. This is, those of you that have taken workshops with me know that I can't stop talking about these ideas. But what Griff and Phil Wu have done in the Kata 2 and the applied systems, if you want to start trading next week, I'd take that course, because you're going to learn the Kata 2 system, which is featured in the Foundations course. But you're also going to learn how to apply anybody's rule systems to your personal implementation, because Griff is going to walk you through how he learned to take my Kata 2 rules and personalize it for himself, and then got his brains beat out every night for 9 months in public. And then Phil built the Thinkorswim bundle to have a complete implementation of that system in Ameritrade. So Kata 2 and applied systems is a reasonable way to expedite live trading. Foundations on my side is another way to do that. You'll learn more systems. You'll get a little more psychology. It should take you 10 weeks to go through the lessons in Foundations. You'll be glad you did, because you'll learn more about trading in all time frames, core, swing, and day. But the Kata 2 and the applied systems will get you to the minimum viable product. And we designed that course to protect you against my enthusiasm for trading. Oh, just one more thing, right? It's the same principles that Bill and Jeff used in the PRX swing crypto. That's a good swing system too, by the way. And what Bill's doing with the adaptive BMR is basically doing the principles from the foundations course, but applied to very long-term swing trading. So he's adding value to the blended monthly rebalancing. So what they've done is basically done a hybrid of all the things that I teach, but rendered it down into a single system. So I would strongly suggest that the Kata 2 and the applied systems is the fastest way to find out if our style of industrial manufacturing and total quality management and continuous improvement and Kaizen in the Gemba, the Japanese quality circles, if that's for you, because that's a really powerful metaphor for trading. Now, if you want to try an even smaller minimum viable product, my brother's strategies on the sniper are even simpler. There's 5 different reasons why things go into the target box. You don't even have to know why they're there. And when they come out of the target box, there's one of 3 patterns that you use to trade them. Done. Lather, rinse, and repeat on any time frame. Intraday, 30-minute, or what he's also doing with the 3-day and the 9-day. That can get you started in a day. To be fair to him, he's started a new position as a senior mentor and coach for hospice nurses in the state of Michigan because he's an expert in that. And that's where I think his intuition and risk management and decisiveness comes from. But he's been trading with me for 25 years, and he's rendered my teachings down to just that pattern. So that's a way to do it. Kata 2 gives you more of a systematic, rules-based approach. The sniper system gives you more an adaptive approach. The PRX crypto that Bill and Jeff are getting ready to teach again for VTI is also very good for swing trading. I mean, Bill was doing that, in the evenings with end-of-day data, and running a business and being a father. So all that stuff that's what I would say. I would, depending on your learning preferences and where you are, that any one of those can work for you. I would lean towards the Kata 2 and applied. Foundations just takes you 10 weeks to find out if it works for you. And if you take the Kata 2 and applied systems, you get a coupon for foundations anyway. So there you are, done in one. And then it's less work for me, if I'm being honest. All right, let's see if there were other. I think it was. Yeah, for I'm going to pronounce it wrong. Egan Horgan. Yeah, what's in the AI space is terrifying. I work with that on a daily basis with DARPA. Fletcher, who does the storytelling science at Ohio State, is also on contract with DARPA to incorporate narrative science, storytelling science into artificial intelligence platforms. And I'm working with him and DARPA on how we develop that and how we train it and how we protect our commanders against their overconfidence and underconfidence in AI. That turns out to be the problem. It's the problem of Cinderella, or whichever one. I guess it's Cinderella. Just right. Too hot and too cold. That's just right. That's what we're trying to get with AI. You should trust it up to a limit, but not beyond. But you should not disregard it. The people that are afraid of AI are the same people as math teachers who said, hey, you're not going to use a calculator in my math class. Who was the same guy that said, a steam engine? You're not going to use a steam engine to drive a train when I have perfectly good horses. you know. So by the same token, you don't want to be the drunk guy that goes to sleep in a Tesla and hopes that their AI is good enough to get you across country over roads that were not optimized for AI. I mean, if you made roads optimized for AI, you could go to sleep right now. And 30 years from now, people are going to look back and say, can you believe those murderous chimpanzees thought it was a good idea to let people, mammals, drive these death machines at 70 miles an hour when they had perfectly good AI? That's where we're close to that already. But yeah, AI is astonishing in what it can do. I'm exploring the heck out of it with writing and research, and I'm working on a project with my son to take the millions of words that we wrote for the book but didn't use and turn that into a well-tuned database that will answer questions of us the way we want it done. So it's not reading the entire ChatGPT-4 database, but we are proofing the quality documents that go into the database that it then answers questions from. So you get a tuned Q&A robot. So that one's on the short list of things to be done. All right. What else? Anybody else? Oh, I see a couple from DR there. Let's see. Yeah. So for BK here, what I would say, the classes that I'm teaching on my side of this, on this side of it, every single lesson is recorded right now with me lecturing and showing the slides, and with homework assignments to be done on your time. And then you come to the office hours if you have a specific question or you want to discuss it or whatever. And the recordings on those lessons include the discussions I've had with other students who have taken that lesson. So for instance, in the foundations course, we've had 5 cohorts go through that. And we have well over 150 hours of just Q&A and discussing the lessons and back and forth and highlights of the course. So you can take that at your own time. Now it's also possible to do what other guys are doing, and that is getting together in a small cohort and going through the lessons together and forming your own study groups and accountability partnerships and working through that way, and then deciding to come to the office hours with me or not. Or you can just send me the questions. I'll answer them during the office hours, whether you're there or not. And I record that and I put that into the course and send you the links. So, and then, so for the Euros, the Euros typically come in on Sunday morning at 9 o'clock on foundations, because that's usually like that's like about 4 in the afternoon on Sunday. Or sometimes they'll stay up late or get up early for the Thursday night one. But that's what I mean by the hybrid delivery of these courses, is that the material is there. And oh, by the way, once you take the course, you have access to all future updates to that course. So when the next cohort goes through, you can keep doing that. And the guys that are taking, half the guys that are in the creativity course right now, it's their second time through it. And a couple of them, it's their 4th time through it, because they're learning something new on each of the lessons every time they go through it. It just happens. It's like it being an archaeologist, and you start carefully uncovering things and getting new insights as you go. Yeah. So on the book, the book is with a guy named Steve Gordon. He's a smart guy that helps business experts get their books published and become bestsellers, and their editors are very professional. So the book is in their hands. I expect them to do what they need to do in a couple weeks. Really, the only thing that needs to be done anymore is finalize the picture and the title, because we wrote that and then rewrote it with ChatGPT 2 or 3 times, and then ran it through Grammarly, and then edited it ourselves for content. So that book contains a lot of past, present, and future. There's chapters in there about things that we've done in the research weekends, things that we're doing now, things that we're planning to do. And then there's a chapter in there from my brother and from Phil and Griff as students of mine, showing what it looks like to apply the lessons that we teach and then do that inside the book. And then I'm going to help each one of those guys turn their chapter into their own book, because they're showing a lot of skill when it comes to developing and teaching and coaching these trading systems. And what feels good to me about that is that I'm 65 and getting tired. They're 35 and 40 and are going to do this for life. So between Jeff Boccaccio and Bill Scheit and Griff Cooper, I feel like our learning ecosystem is in good hands for the next 30 years. But yeah, the early copy, as soon as the, I'll give VTI a heads up, or you could sign up on Patreon to get the daily reports and all that. Hey, we've got about 1,000 sessions in Patreon in the archives. It wouldn't be dumb to become a Patreon subscriber and just start going through the highlights of those things. We got 500 sniper trades of the day, 1,000 nightly podcast sessions. When you go to some of the earlier ones, you can see us in the early days of sniper trading and what it was like. You can see all of Griff Cooper's nightly coaching sessions in the bar by bar trading. Oh, I forgot about that. That's a good workshop too, where you get to go through the bar by bar trading, just like getting live trading, live coaching. That's some pretty good stuff too. But we'll send a note out to VTI on, when the book is open. I'm hiring that guy for a big chunk of change. He better figure out how to get the word out. It's going to be a full court press. It's going to go from Amazon to VTI to Books on Tape, that whole crap. Where every possible avenue for distribution of that book, we're going to use. And it really is, it's what we've learned to do. I guess the biggest problem I had writing it was trying to say everything that could be said about trading. And I realized finally that the only thing I should be doing is just describing as best we can exactly what we do and why. Here's the things we did. Here's the plan that got us there. Here's how we prepared. Here's the decisions we made and why. And here were the results. And here's what we learned. And here's how we adapted it. That's the story of that book. And then the chapters that my brother Bill and Phil and Griff did were the things that they learned from me as interns. Like, the reason I took Phil and Griff on as interns, and I'm certifying them as teachers now, is that they went through all of the foundations and the creativity courses, and they created concise one-page note sheets for every lesson in there, which is now part of that workshop. So you can see timestamps for all the lessons, all the key notes. They've updated the 70-page dictionary, and updated it with all the definitions. And they're just doing marvelous work. So that's why I feel confident in saying, hey, taking their Kata 2 courses is a nice, concise way to learn my stuff from guys that are using it successfully. They've done a lot of the work for you in that sense. Yeah, my Patreon site there's patreon.com, Ken Lum. So that's everything I wanted to present today. And you guys are welcome to listen in on the nightly podcasts. The best way to do that, if you're on the fence and thinking about this, is sign up on Patreon for either the $25 or the $100 monthly fee. You're going to get access literally to thousands of podcasts and lessons and all the archives and the daily and weekly reports. And it's the right thing. And listening to the nightly podcast, that is a workshop. in and of it. That is an applied workshop. And the first 20 minutes of every nightly podcast, when you see me adjusting my swing portfolio using 30-minute bars, that's going to be very persuasive to you, especially if you're a part-time trader and you're using end-of-day data, or you can only trade at certain times of the day, or you want to do this on the side. That's the number one recommendation I would make, is listen carefully to those 30-minute swing portfolio podcasts. It takes literally 20 minutes a night, and you can see me just every night just updating it, one more set of bars and making decisions. And it's a powerful testimony to the techniques. So that's what I want to say about that. One of my next projects is to just go through those podcasts from the start of the year. Those started I started doing those on 1 January because somebody asked me to. Hey, could you show us how you do that? Yeah. So now I do it every night. And I'm going to go back through those and just pull out the 20-minute pieces. And then right after that, I do one intraday sniper trade of the day on 3-minute charts. But my spider sense is that there's a lot more folks that are swing traders than want to do intraday trading. And that was what motivated me to do the hybrid swing on the 30 minutes. And that thing has turned out to be the best thing I've done all year. That's where I make most of my money in trading, is in that portfolio with those moves. The 3 minutes are fun, but I got a lot of things going on. I can't always be there all day, every day for that. But I can for the 30 minutes because I can do that on my phone. Because I've learned now to look at the charts and evaluate, within 2 seconds each chart. Because it's only one more bar. It's easy. All right, last call for questions. Again, let me give thanks to you guys for your patience and courtesy, and I look forward to working with you and wish you the best of success in the market. Keep your risk measured and your powder dry. And I think the nice young lady here is going to tell us about Bill and Jeff and Phil and Griff. Over to you.
Yes. In the recording that will go out later today, we'll have more information on all of those workshops. And also, if you've got questions after this webinar concludes, you can send them directly to me at customerservice@vantharp.com.
Thanks, Sarah.
Anything else, Ken?
No, ma'am. I think we're good.
Well, thanks, Ken, for sharing your experience and insights with us. And thanks to everyone who tuned in to spend part of their day with us. We appreciate you, and we hope to see you next time. Bye-bye.
Cheers.